Hello, it's Adil bringing you a review of the FTSE 100 from an intermarket analysis basis. Okay, so where exactly are we heading with regards to the US markets? Okay, so fundamentals. Russia-Ukraine situation still remains up in the air because we did sign it, although we have signed a truce on Friday. The truce seems to have obviously broken over the weekend with shelling, even though Mr. Poroshenko or Mr. Putin do claim that the truce holds. There still seems to be fighting going on. Okay, with regards to that, and also the Europeans obviously are still going ahead with sanctions on Monday. So that's I don't know what type of truce that is, but certainly will be short-lived for my given my expectations anyway. So and given the market's expectations as well. Now, how will that translate, etc., etc., yet to be perceived, and we'll see exactly what happens. So far over the weekend, there has been some negative news releases with regards to that truce, and whether it holds or not is certainly, again, like I said, up in the air. Okay. Now, with regards to the US markets, then, so weak NFP data on Friday. So again, a weak job number, although the doves will be jumping and cheering, but yet there is talk about the number being revised much higher. Okay, and with it being an aberration or an anomaly. So again, there's some sort of uncertainty regarding that as well. So the way in which I'd like to perceive things is, given the fact that all the economic data that has been coming out so far has been stronger than expected, and that hasn't triggered off the tapering trade, or the fear of QE no longer being there, and the stock market has perceived good news as being good news and bad news as being bad news, not the other way around, such as a QE trade where good news is bad news and bad news is good news. So therefore, if that's the case, then we do perceive this economic data release as confusion with regards to economic policy, and overall should be interpreted as being bearish for the market. So that's something that I'll certainly be looking at, and we'll look at it from a technical perspective as well, whether that can be justified. So the argument of QE obviously continuing, and the dovish monetary policy continuing, lower rates continuing, given the NFP data that's come out weak on the Friday. Okay, so that's certainly an argument, and given the fact that the US dollar is into resistance, if you look at the chart of the US dollar, then the NFP really confirms the a reversal in the US dollar, given the weekly chart of UUP is certainly into resistance and into gap for resistance as well. Whether or not that obviously triggers off a new wave in the US market, and obviously makes a new high, is yet to be materialized. So we'll see exactly how that plays out next week. So with regards to geopolitics, again, like I've explained, the situation in Ukraine and Russia remains very, very tense. That could swing either way. Okay. Look at it from that perspective. Weaker economic data out of the US should be perceived as risk off, so certainly take that into consideration as well. Okay, so there's two factors and two variables that we understand. Also, with regards to the European markets, yes, we've done the 1-2 points, or ABS or QE lights, plus the rate cut, and whether or not that transpires and allows the markets to certainly propel higher, again, that's debatable as well. Okay, so given the fact that the euro obviously has the QE carrot there, obviously the euro USD will certainly remain towards the dovish side, and obviously that will help the dollar to continue its move higher. So again, that's a different situation, different scenario. So if the euro itself is losing quite considerable value, the dollar is obviously strengthening, and that's going to hurt exports going forward, and again, that's negative for the US market. So you'll see a divergence now where Europe will remain strong and the US markets will remain weak. So that's certainly worth noting, okay, with regards to that. So like I said, I also mentioned the concept of sterling potentially making a bottom, okay, given the fact that the US dollar now is into resistance. So that's another factor as well. But from my perspective, with regards to US markets, the US dollar certainly has gone higher along with equity prices. Okay, so obviously a stronger dollar and stronger equity prices mean that individuals are interpreting strong news as strong news and bad news as bad news. So if that's the theory, then obviously I'm going to stick with that for now until it's proven wrong, and therefore I'm perceiving the NFP data as being weak, even though we did have a short squeeze Friday on light volume, and obviously Miss Yellen's algo manipulation. So again, we'll see exactly what happens on Monday when the big plays are about, and see which way the money moves. Okay, so that's the fundamental backdrop. Okay, Let's have a look at the technical backdrop now. Let's start off with the Dow. The Dow Jones is into or holding horizontal resistance, although the Dow Transportation Index is obviously broken out. So that's something certainly worth noting. Now, the reason why that's broken out predominantly is more than likely due to the drop in oil, given the geopolitical tensions easing with regards to Russia and Ukraine. Now, with regards to the oil price, obviously catching, oil price moving lower. Let's just bring up the chart of oil if I have one. I bring up the USO, which is the ETF for tracking oil, and let's see exactly where that's poised. Okay, let's have a look. Okay, so USO daily, right? Okay, interesting. Let's have a look here. Maximize this. Okay, so daily chart certainly seems to be into some sort of support down there. Obviously, we're into gap fill support, so oil is certainly into support. So if oil is into support, then we should potentially get a move higher. If we get a move higher, then obviously that's the situation with regards to the transportation index. So given the fact that oil and transportation index have an inverse relationship, that when oil is at support, then obviously US transports should in theory obviously move lower. So this is a potential fake out for a nice reversal lower, and that obviously confirms a double top if you have a fake out on the Dow transports, and that will confirm the double top on the actual Dow as well, Dow 30. Okay, now let's go to the S&P 500. Let's just confirm and see exactly what's happening here. Okay, so previous resistance equals support has held. Is 1990 level has been key, and obviously we've had quite a powerful short squeeze going into the close. Although having said that, keep an eye out for resistance again, which we're at. Okay, so if I just bring up my chart now, we're at this resistance level and this resistance level here, so we're watching out for that. Okay, so very, very important, very, very pivotal. Okay, with regards to that, we still have not closed this gap below here, and this is a gap that certainly needs to be closed. Although we did come close, we came close on a Friday, I think. Yes, is that correct? Yep, we did come close on a Friday before the market obviously short squeezed higher. Okay, right. Okay, so yeah, we short squeeze higher, and we'll see exactly what happens here. But we are into horizontal resistance. So with regards to the S&P 500, we did have the US hostage situation in Iran late Friday, which seems to be no news coming out from that since then, and also obviously the Russia-Ukraine situation still remaining tense. So daily chart, obviously technically at the moment you can't really fault that, but having said that, if you cross-reference that with the Russell 2000, which is obviously its pair, ever since failing at the gap valve resistance, and it's on the verge of breaking this potential bullish channel. Okay, and if you look at a 60-minute chart, what do you see there? You clearly see a HNS formation. Because you see a HNS formation, that means that this market is poised to reverse in the opposite direction. Obviously we've broken this key bullish trend line. Okay, so that's basically the situation that we find ourselves in. Okay, so you can draw your horizontal line around this region. So you've got your neckline there, your head's gone in, you're looking at your right shoulder retesting the breakout level, and down we go. Okay, and then obviously you've got this unfilled gap below, and that's the situation that we find ourselves in. So gap level below, and that's something that certainly needs to be kept an eye out for next week. So HNS formation, and down we go. Okay, so that'll be a bearish bias from that perspective. So the Russell isn't confirming the strength in the S&P 500, which is a warning sign, and the Dow transportation is certainly distorting the move higher, given in comparison to the Dow Jones Industrial Index. Okay, so bear those two factors in mind. Now let's have a look at the Nasdaq. Sorry, the Nasdaq is obviously lagging from my perspective because it has inherent weakness. Okay, ever since the bearish engulfing candle, look at your 60-minute chart, you got a nice HNS formation. Obviously if that HNS formation gets negated, then it's a totally different story, and we'll have to take it from there. So we're into this trend line resistance up here, so you're looking at 4095. If you do get there, that's certainly solid resistance, but we are into resistance already, looking for a potential reversal going southwards. Okay, so that's basically where we are from that perspective. And obviously as you can see, short squeeze late Friday, going into the close. So I mean, it's classical manipulation type of activity there. Okay, so if I cross-reference that with the Nasdaq, or sorry, the biotech. So if you look at the biotech, what do you notice there? You've got H&S formation 2. You're waiting for this right shoulder to play out, and then obviously down we go. You've got your left shoulder there, your head, obviously, and then looking at right shoulder, then down we go. And you're looking at your Fibonacci tool, taking the pivot high, taking it to pivot lower, you're into that 38-50% resistance. So that doesn't bode well at all. Okay, the semiconductors obviously into horizontal resistance from that perspective, and the 60-minute chart, you can see a rising contracting wedge pattern. Again, it is not a bullish sign and certainly indicates weakness. So as you can see, there's a lot of different divergences, different movements in each market and within the US markets themselves, hence the reason why the confusion and a lot of uncertainty exists. Okay, very important from that perspective. Now I'm just going to give you shed some light on the US market. So given the fact that we are Mr. Murphy bases his analysis on intermarket analysis, so we can observe another index in a different time zone to confirm whether or not the US markets are bullish. Okay, now with regards to European markets, given the fact that we've had QE light plus a rate cut, the CAC should certainly, or any European index should technically be signaling bullish move. Okay, here it isn't. Okay, if you look at the CAC is approaching hit the gap fill resistance and has obviously failed ever since then. If you look at a 60-minute chart, you can only see that there's it's in a bullish channel. It's hit the upper level resistance and wants to test the lower channel or lower channel resistance or lower channel support. And the 10-minute chart obviously has a H&S formation. So if you have a H&S formation in a smaller time frame, and then obviously resistance in a larger time frame, and given the fact that Mr. Draghi did say that there's going to be no more rate cuts now and everything's now priced in and factored into the market, and obviously the Germans oppose the QE or the concept of QE such as ABS. Therefore, that's certainly given the fact that the markets have obviously been bought in anticipation of that QE, and that's not going to materialise because the Germans are against it so much, then that itself can be a reason to sell the European markets. Not only that, the Russia-Ukraine situation, like I've discussed already, certainly is just a paper truce, and fighting still continuing over the weekend, and there's talk of that being broken as well. Again, that's another variable that's going to cause the market sell-off. Weak NFP data, again another reason for the market sell-off. And obviously, given the fact that the Scottish are voting yes in this latest referendum that's come out over the weekend, obviously that doesn't bode well for the FTSE 100, which I've explained already, and that obviously has a knock-on effect on the rest of Europe, which in turn has a knock-on effect on the US markets as well. Remember, they all move in tandem, so very important to grasp that concept. Okay, folks. So I think I've explained myself with regards to the US markets. With regards to the US market, what I expect, provided the S&P doesn't make a new high, provided the Nasdaq doesn't make a new high, and then the Dow Jones doesn't, then obviously then the bears are in control and down we go. Obviously, if they make a new high, then the bears have certainly lost momentum and the short squeeze party continues. Okay, folks. So risk on, risk off, wax on, wax off. Take care. Goodbye.